All right, welcome everyone to the webinar, Can Japan Deliver on Sustainability? My name is Mike Holman. I'm a SVP and Group Director here at Lux, and I'm your moderator for today's session. Obviously, we're talking about the impact for Japan and the impact on Japan and the impact Japan can have in the greater sustainability transition. And we have two analysts from Lux who are really well suited to address that. My colleague Anthony Schiavo, who is Senior Director and Principal Analyst with our Materials and Manufacturing group, but has also lived for many years in Asia and spent a lot of time working with our Japanese clients and the Japanese innovation ecosystem. And Ian Reinert, Associate Research Director here, who also in addition to having some public policy experience, which is quite relevant for the topic, spent several years working for a large Japanese corporation as well. So they'll be our guides throughout the webinar. And for you in the audience, you can type any questions that you have into the questions box on your screen. We will have some time for questions at the end, and we'll answer as many as we can get to. But if you have a question that doesn't get answered, please don't hesitate to email that to questions@luxresearchinc.com, and we will respond. So with that, let's get into the presentation.
Thanks, Mike, and thanks to everyone who's joining us today. We're going to be asking this question, can Japan deliver on sustainability? So it is probably worth starting by asking, what does that mean? What does it mean to deliver on sustainability? We're going to be looking at it in two ways here. The first is very basic. Can Japan decarbonize? We're going to be looking at the policies, the drivers, the energy mix, the industry, and we're going to be asking if this is possible. And then we're going to ask a bit of a bigger question, which is, can Japanese companies enable global decarbonization with innovative technology or business models or their approach to different economies and geographies? First, a little background before we get into some of the analysis. Japan emitted about a gigaton of carbon dioxide last year. That puts it right here in the middle of the top emitters, so it's about 6th or 7th overall. You can see that it's pretty substantially less than the big emitters of China, the United States, but it is quite a substantial emitter in its own right. So decarbonization is a very worthwhile goal, just from the perspective of fighting global climate change. However, there's a bit of a challenge here. This is Japan's emissions over the last 2 decades. And what you can see is that emissions from the power sector have not just remained stubbornly high, but really have increased since 2009. This is obviously due to, at least in part, a move away from nuclear power after some of the nuclear accidents that occurred in Japan. But the trend, was actually sort of increasing before that. And in addition, you notice that the other industrial combustion is this second highest sector, or the second highest source of emissions in Japan. And this is quite a bit higher than the global average. Industrial emissions are, maybe 9%, 10% of global emissions. But in Japan, they are the second largest source, maybe closer to a quarter. So Japan faces a kind of a dual challenge here when it comes to decarbonization. One, it has this very sort of relatively carbon-intensive power sector, and two, it has a very large and difficult to decarbonize industrial sector. I also want to mention that, Japan is this history of being innovative, but in the last couple decades, innovation has really been dominated by Silicon Valley. However, in the last few years, with the failure of Silicon Valley Bank, with the shift away from zero interest rates, and with the growth and focus on clean tech and climate tech, the innovation sort of center of gravity has begun to shift away from Silicon Valley. And I think there is a real opportunity here for some of that innovation ecosystem, some of that excitement, some of that leadership to shift to Japan. And you see that, Japan has really been trying to, or it seems like they've been trying to seize on this opportunity, whether it's through large funds, whether it's through areas like solid state batteries and green technology a bit more generally. And certainly every Japanese corporation we talk to is very, very interested in leadership in clean tech and climate tech. So we're now going to look at two different elements. One, we're going to look at the policy in Japan and understand what the prospect for decarbonization is. And then we're also going to look at the innovation ecosystem in Japan and understand, can these companies really end up as leaders in innovation and take a control and play a large role in that decarbonization globally. So, Ian, you're going to kick us off and talk about Japan's policy.
Great, thanks, Anthony. So, as we look at Japan's policy, there are two global narratives around what Japan is doing for the climate change problem and the sustainability transition. There's, on the one hand, this vision of Japan as a leader. And that was really kicked off by former Prime Minister Suga in October 2020, when he announced that Japan would be carbon neutral by 2050, and that Japan would make major short-term efforts to get there, a 46% greenhouse gas reduction by 2030 from a 2013 baseline, which is a big goal. And the key document for this is the Green Growth Strategy through Achieving Carbon Neutrality in 2050. This was first issued in late 2020. And this is a bold vision for Japan and a signal that the country wants to be a leader on climate change. Now, the second narrative, which you see more in the Western press, is this idea of Japan as an anchor that's holding back some progress. The Japan that's watering down the G7 statement on climate change, that did not want to sign the pledge to end coal at COP26, and in other ways is dragging its heels. So we're going to take a deeper look at these policies and decide for ourselves what Japan is doing and whether it adds up to a big impact or not. And to help us do this, we're going to look at the Lux Policy Compass. This is a framework that we've developed to help guide innovation professionals to understand how they should be thinking about policies worldwide and how these interact with the innovation ecosystem. So you see on the y-axis, the vertical axis, that's a measurement of business impact. And the positioning of a policy, of a dot here on the compass, reflects a large range of factors from material inputs, manufacturing processes, market demand, government subsidies, and others, to look at the sort of absolute value, the magnitude of change. It's not a judgment of whether these policies are good or bad for individual companies, or it's really saying, is this going to shift the economy in a meaningful way, or achieve large decarbonization goals? So that's the y-axis, the business impact. On the x-axis, policy likelihood, the horizontal axis, it's a pretty straightforward measure of has this policy already been enacted? Is it a law? Or is this something that is at the proposal stage where you have legislators talking about it? That would be in the middle, or something towards the left end. That's merely an idea that some are floating and talking about. So here we have some examples. The EU Fit for 55 plans to decarbonize the European economy by 2055. It's going to have a significant impact on businesses. And although it's not completely set in stone, the broad outlines are clear. So it's more toward the right side of likelihood. In the US, we have the Inflation Reduction Act, which has been very disruptive and is changing the economics, techno-economics for a lot of businesses. And that's why it's towards the very top of the business impact scale. And then an example of something a little bit more speculative, an emissions trading system in China, which could be impactful, but it's still early stages, hard to see. So towards the lower left of the policy compass. And then all this comes together. As you plot a picture, you can see a trend of either policies that may be evolving, not sure about the likelihood, or policies that have been enacted and are very certain to happen, but may not have so much impact. That's the manageable and lower right. And then top right, something that's disruptive is going to happen, and it will mean a lot of change. So again, we'll look at the what we consider to be the 4 pillars of the green growth strategy for Japan's decarbonization. This is the Green Innovation Fund, grants and subsidies. The second, tax credits and incentives. The third, an emissions trading system, or ETS. And then fourth, a package of regulatory reforms. Okay, great. So here's our first one, our blank compass, which we'll build up. And you see in the lower right, a red dot representing the Green Innovation Fund. What's that? This is 2 trillion yen over 10 years. That's $13 billion, which is a big chunk of money. And the idea is to boost these projects for decarbonization, not only looking at the impact on greenhouse gas emissions, but also market potential. So are these projects that could grow into something more, that are developing technologies that Japan may then sell, develop, export? And we'll talk about that a little bit later. In terms of the mechanism, this will be housed under METI. It's run through NEDO, the Japanese organization that stands for New Energy and Industrial Technology Development Organization, and they'll disperse the funds to both large and small businesses. And the idea here that you see in the Green Growth Strategy is that this will incentivize further private investment. And that certainly makes sense. We agree with that, although the hope that this could induce a 1,500x additional funding from external ESG sources is, I think, a bit unrealistic. And all in all, the amount of money is not so large, especially compared to what you see in US and Europe. And so this is, as I pointed out, in the lower right. The next element, tax credits and incentives. Again, nominally a large figure here. The government expects that these credits could account for about 1.7 trillion yen over the next 10 years, or $11 billion. And these are credits for decarbonization investments, both in projects that will reduce the carbon footprint of a particular company, as well as production. So building new factories or building out factories to manufacture the key equipment, the fuel cells, the electrolyzers, et cetera, that will be necessary for this change. And there are also some potential benefits for R&D, tax write-offs under certain cases. This, we think, will be perhaps even just a touch less impactful, and it's still yet to be seen how companies will take this up. So it's a little bit less certain, and its likelihood is more to the left. So that was the purple dot. Here we've added the green dot on the compass, Japan's proposed emissions trading system. It's not in force yet. It's expected to come into force on a voluntary basis in the next couple of years, and then as it develops, will become required in fiscal year 26 or 27. And although it covers a lot of Japan's economy, it still would be just under half, or about 40% of Japan's greenhouse gas emissions. So although there is a lot of scope here, we're still not talking about the whole economy under it. And the initial reports for the expected carbon price are quite low, about 2,000 yen. So not really forcing difficult choices to the extent you will see with, for example, Europe's ETS, where the price is typically around 90 or even as much as 100 euros per ton of CO2. So quite a lot less here. The last element, I've highlighted 4 key regulatory reforms here that are mentioned and discussed in a little bit of detail in the Green Growth Strategy, but are still yet to be determined. So in terms of likelihood, this is a middle score. There are some ideas out here. They're very strong. They're being discussed, but we're not sure exactly where this will land. In particular, a proposed requirement for utilities or power retailers to have a minimum level of renewable power. What that minimum level is, of course, that's the key question, and it's not indicated, but something we'll be watching. Some other reforms, pretty standard things around vehicle fuel economy, as electric vehicles spread. This will nevertheless be important. Energy conservation in buildings. Buildings do account for quite a lot of energy use in Japan, even with efficient buildings. And then some things that may not seem important, but that are really critical, like reducing the amount of red tape and regulatory requirements for new renewable power projects and connecting to the grid. These are really key things. So the impact here is higher, getting towards a middle level, although, as I said, less certain. So that leaves us, with a trend, and the compass needle is very firmly in the manageable quadrant. These policies are likely to roll out. We can already see the outlines, in some cases, some of the specific details. But at the same time, these are things that companies can handle. It's not going to really massively change the premises for new businesses. There will be growth opportunities, there will be risks, but it's not disruptive in the way that other policies have been. So our conclusion here is that the decarbonization drivers are not strong enough. Compared to the carrots and sticks worldwide, the Japanese government is not offering quite as much. For example, the sticks, that's the carbon price that I mentioned in Europe. That's creating change. The Carbon Border Adjustment Mechanism, CBAM, will also bring in more change. On the US side, it's really more about the carrots, the subsidies that are flowing out the door for things like green hydrogen production, electric vehicle sales and charging infrastructure, carbon capture and utilization. These are being funded in really big ways, amounting to hundreds of billions of dollars over the next 10 years, maybe even $1 trillion or more are some estimates of the US IRA. So if you have Japan offering $10–20 billion versus $1 trillion over the next 10 years, you can easily see that the scope of what's being brought to the table doesn't add up at the same level. So will Japan's bureaucratic arm twisting be enough? It's possible, but from the policy drivers, it's not as strong. And really that's because this is a growth strategy that hopes for a kind of natural evolution of lower cost renewables. And you can see that in Japan's energy mix outlook here. So if we look ahead to 2030, this is what the government projects for the energy mix. And that's based on the assumption of solar and wind getting cheaper and becoming more competitive with fossil fuels. So there's almost 40% of the energy mix that could be or is hoped to be provided by renewables. This would be a doubling of solar power, a tripling of wind power. And you can see in this dark green sliver the emergence of hydrogen ammonia, ammonia as a carrier of hydrogen, as a burgeoning part of the energy mix, and something that Japan is looking to develop more and more and expand over the coming decades. But there's still a lot of fossil fuels as well. You can see large slices here for LNG, for coal, and then of course nuclear ramping back up to another 20%. So in some ways, it's kind of business as usual for the energy mix. And it remains to be seen whether the optimistic projections for lower costs of energy will pan out to get to this rosy picture. And as I mentioned in the regulatory reform section, will the government force power providers, utilities to take bolder steps? We don't have an answer for that yet. So that's the policy picture. I hope that's clear. We'll talk about some more of the implications later. But for the next section, I'm going to toss it back to Anthony to talk about the innovation ecosystem and what the Japanese corporates and small businesses are doing on that front.
Thanks, Ian. As we've seen, the Japanese government is in a lot of ways counting on the private sector to deliver on cost reductions and making these technologies competitive. So we're going to now try and measure the performance of the Japanese innovation ecosystem. And this is, necessarily a bit of a messy process. There's no one true way to perceive the innovation of an entire country's economy. But I want to look at three factors which I think are telling: corporate R&D, the startup ecosystem, and then companies' success with open innovation. So let's start with corporate R&D. I analyzed patenting data from 5 key areas. hydrogen electrolysis, carbon capture and utilization, decarbonized steel, decarbonized cement, and plastic waste management technologies. These are areas that are going to be important for industrial decarbonization, the sort of other half of the Japan decarbonization battle. But these are also areas where Japan should theoretically be fairly strong in terms of patenting. These are strategic priorities for Japanese companies and strategic priorities for the government as well. When you look at the global patenting data in these areas, we analyzed about 5,000 patents here. What you can see is that there's a clear trend of patenting activity increasing over time. And in particular, we see a big uptick in the last couple of years, as there's been a lot of patenting in areas like hydrogen and CCUS in particular. And you see this worldwide, you see this in the United States, you see this in Europe and South Korea, but you don't see this trend in Japan. And, you know, this doesn't necessarily mean that these technologies aren't being developed in Japan, and they are, and there are some companies with good technologies around these areas in Japan, but this reflects just a lack of activity relative to some of these other areas. And it's a bit surprising to see, and a bit concerning to see that Japan is not in line with the trends here of the other nations. Looking now at startups, I think you'll see something similar. We analyzed a sample of 1,000 startups. These are the 1,000 startups that we have most recently pulled into our large database. We have about a 3 million startup database in the back end of our data system. This is the 1,000 most recent startups that were founded in Japan. What you can see is that they're mostly in areas like blockchain, AI, pharma, and medtech. This is not to be sort of surprising. These are very popular areas. And there's about 45 or so that are tackling core sustainability issues. What's challenging is that there are a number of issues or sustainability goals that aren't well represented by these startups, particularly in the area of industrial decarbonization. And if you compare this data with Germany, right, you have a higher proportion of core sustainability startups, 77 in the most recent 1,000. But you also have a higher rate of startup foundation, 1,000 startups in just a year and a half as opposed to 2.5 years. And you have a somewhat higher rate of startup formation on a population and GDP adjusted basis. So the Japanese startup ecosystem is essentially taking fewer swings. They're taking fewer attempts at solving these big core challenges. And again, like the patenting, this doesn't mean that there aren't good technologies. It just means that it's lagging somewhat, or it's underperforming what you would expect for a developed economy of this size. And there's going to be fewer shots at really disruptive technologies emerging in Japan. However, it's quite a different picture when you look at open innovation. Here, we mapped out just a handful of the partnerships of major Japanese conglomerates. And these are either partnerships or investments that they've made across a similar set of areas: chemicals, cement, energy storage, hydrogen. And what you can see is that Japanese companies are actually doing a really good job of engaging with and investing in leading technology players, whether that's Lancetech, OCO, or a group like Numat, which is supporting a lot of the hydrogen work. And again, there's a number of other companies we could have put in this on this chart. We basically just ran out of space. So the open innovation ecosystem in Japan, their ability to go out and acquire technology, it's actually performing quite well. And this is also aligned with the collaborations that we're seeing with cross-border entities. There's a long history here from some of the trading companies and sort of strong conglomerates operating globally. And we're seeing that with clean tech, whether it's areas like direct air capture or batteries, carbon capture and utilization. We're seeing these cross-border projects begin to ramp up. And so Japanese companies are doing a fairly good job of accessing technology and accessing those incentives that are being put in place globally to scale that technology up. So coming back to this question that we asked earlier on in the presentation, can Japan deliver on sustainability? Well, we've seen that Japanese decarbonization drivers are weak and that a lot of the domestic Japanese innovation ecosystem lags. However, there is a strong set of tech partners and corporate ecosystems around open innovation and scaling up these technologies outside of Japan. So we're seeing quite a split picture here between the domestic situation and the role that Japanese companies are playing on the global world stage. Okay. Now, as we get into our outlook, we just want to share a few thoughts on what this means big picture and long term. First, obviously, Japan is not doing enough to meet its decarbonization ambitions, its national decarbonization ambitions, I should say. They're missing the financial incentives. And a bit on a higher level, their strategy of prioritizing growth makes it really difficult for companies to make the kind of trade-offs that are necessary for deep industrial decarbonization. Plus, other areas like energy efficiency, they're just not going to be as impactful for Japan overall. In addition, there are a number of risks at play when looking at their domestic technology ambitions. Japan has these somewhat unique energy issues. There are some countries like Korea, South Korea, I should say, that have a similar set of challenges. But things like ammonia combustion are really going to have to be developed by Japanese corporations. And while there's tax breaks and some incentives in place, the overall innovation ecosystem is going to make it a little bit more challenging to develop these domestically necessary technologies. However, it's not all doom and gloom. There are a lot of really strong opportunities for Japan in the coming decades, which my colleague Ian will say a few more words about.
Great, thanks, Anthony. So it may be the case that Japan is on a slow track to decarbonization within its borders, but there are major opportunities when we look abroad, and this is around technology export. Of course, Japan has a strong financial basis for this. That's long been the case, but even more so with the growth of green bonds, ESG investing. The Japan Bank for International Cooperation, JBIC, has a new $10 billion facility to support the overseas development of quality infrastructure, other renewable energy projects. Japan is already a major player in Southeast Asia, where it's helping to install new wind power farms, to develop more efficient and clean burning LNG power plants, and developing technologies for carbon capture. So that's certainly the case where Japan can be a leader. There are a lot of middle income countries with the aspiration to decarbonize, but they may not have the technology infrastructure to be developing it domestically. So they need a partner like Japan. And this can be true for Turkey, Brazil, Mexico, other Latin American countries, where there's a lot of opportunity for Japanese companies to go abroad. And what would that mean for US and European companies? Well, when we look at the picture, it's clear that there will be continuing opportunities for energy exports to Japan. As you saw in the energy mix, LNG, coal, oil all continue to play an important role for Japan for decades ahead. But then when it comes to competition for subsidies and to take advantage of these projects and grants that are unfolding around the world, there will be, I think, a tougher competition with Japanese companies, maybe because they don't have to make the same investments at home to decarbonize. They won't be having to outlay capital on new projects and facilities, so that they may be in a better financial position to compete for overseas projects. On the other hand, European and American companies may then be able to portray their sustainability credentials in a better light. They may have a better carbon footprint, maybe doing more overall. That can be a competitive advantage versus Japanese companies that aren't being forced to change as quickly. So we'd like to offer some disruptors as well. What are some things that may change the picture here? What would change our analysis? What are some black swans that would really affect this view? On the politics side, it's true that nuclear power continues to be very sensitive for the Japanese public. Even though there is now a slight favorable rating among polls for the restart and expansion of nuclear power, any kind of accident would flip that very quickly. And so the Japanese government needs to continue to portray the safety and be very watchful for anything that might change public opinion around that topic. The next is a technology disruptor. And we've highlighted CO2 utilization here. So if there is a breakthrough that can cost effectively allow CO2 to be a feedstock for production of important commodities, already we're seeing progress in cement and concrete. But for example, if the chemicals industry can start to produce some of the key base chemicals and other intermediates using CO2, that would position Japan to remain a leader in the chemicals industry while decarbonizing. The last disruptor on the policy side, let's keep an eye on what China's doing. Although they are behind Japan and others in terms of their ambitions, looking at 2060 as the target for net zero, nevertheless, China is doing a lot to subsidize its own national champions in this race for climate tech. And it may also be looking to use sustainability as a lever for competitive advantage, perhaps rolling out some kind of carbon border adjustment mechanism in parallel to the EU's that would put Japan at a disadvantage and then create ripple effects. So China's policy will definitely have some kind of impact on what Japan is doing for decarbonization, and it may need to respond if China takes a lead. So we're going to finish here before we get into questions with some key takeaways. The first, as you've heard us say, we don't think that Japan is on track to meet its ambitious national decarbonization goals, and that bolder strokes are necessary on the policy side. However, Japan is making contributions worldwide through its export of leading technology for sustainability, and that will continue to be the case, less so building on the innovation ecosystem within its national borders, and more so developing partnerships with startups and other leading players, even academic organizations worldwide, that Japan can then leverage through its strong corporate networks and bring to projects on the ground. So can Japan deliver on sustainability? Yes, in a way, globally, it is making important contributions, but we may find that in 2030, 2050, Japan has not quite hit the targets that it has set for itself. So thanks everyone for tuning into this part of the webinar, and we look forward to your questions.
All right, great. Thank you, Anthony and Ian. A lot of good stuff in there, a lot of food for thought, and a lot of questions coming in about all of it. Maybe just a brief comment on some of the methodology for the work, Anthony, that you showed about the Japanese startup ecosystem. One of the points of feedback that we've gotten, I think even outside of this webinar and touched on by some of the questions we see coming in, is whether or not there is more, activity within that Japanese startup ecosystem that maybe isn't being picked up as well by outside sources. So do you see that as something that's a potential factor? Is there maybe more going on in that Japanese startup ecosystem, under the hood there, under the radar?
Yeah, I mean, I'm sure there is more activity than what's being captured in our data set. That's true, I think, of every country, not just Japan. But what I would say about the data is I'm looking more at the ratio of types of companies, and I'm also looking more at the sort of volume of companies overall. I think you'd have to get to the point of saying, okay, is there a specific reason why clean tech companies would be less likely to be picked up by our system than a company making YouTube videos about cooking, right? Because that 1,000 companies includes all sorts of startups, not just tech startups, right? And I think it's just hard to imagine that somehow sustainability related companies are being picked up at a lesser value or a lesser sort of rate than other types of companies. So there are limitations to the data, and I wouldn't use it just by itself. But I think it points in a certain direction. That direction is, what we talked about, a little bit of weakness in the Japanese ecosystem. But there are definitely technology developers out there and good technologies being developed in Japan. It's just a rate and intensity thing.
Yeah. Well, I think obviously one of the big themes here is the opportunity and the impact that a lot of Japanese companies already are having in helping to facilitate sustainable innovation, decarbonization, deployment outside of Japan. But in a lot of the big geographies, for that, certainly including the U.S., you do see a lot of restrictions, right, on foreign company involvement, domestic content requirements, and domestic sourcing requirements, U.S., Europe, elsewhere. Do you see that as a big risk for Japanese companies, that those kind of, buy American or buy European or buy local provisions limiting the opportunity for Japanese companies to have that impact globally?
I can take this one. I think it's not as much of a problem as it might seem on the face of it. For example, the IRA, the U.S. and Japan were able to sort of massage the requirement to be FTA partners. Even though the U.S. Congress wasn't delighted about it, there is an agreement that Japan's critical mineral supply chain will be accepted for subsidy eligibility within that. So that's very important. And because Japan has already, especially in the automotive industry, done so much to invest in U.S.-based production, that I think they'll be able to, take advantage of the subsidies, the fundings for battery production, for EV production, EV charging, and so on. And then when it comes to Europe, Europe's been sort of caught between its open trade instincts here with this new kind of, dirigiste philosophy. And it seems to be wanting to maintain the open trade patterns. And so because of that principle, I think it will be unlikely to cut out foreign competitors too much. And so Japan should be, and Japanese companies should be in fine position.
Yeah, and I think some of the other geographies you called out, and Latin America, other areas of Asia, are probably less likely to take that sort of approach, at least as much as the U.S. has.
Mm-hmm.
So maybe one last quick question. Again, there's this dichotomy between the large role that the Japanese companies can play in decarbonization globally, and maybe the more limited incentives domestically. How do you see that? There's an interesting question here about how do you see that sort of bouncing back? Like ultimately, as these Japanese companies are playing this major role globally, do you see that creating an opportunity for them to sort of bring some of that technology, or to push to bring more of that technology back to Japan as well?
Yes, certainly. I think on some level, but I think there will be challenges because a lot of, especially for the energy transition, it's a lot of very sort of geography influenced technology and technology deployment questions. So, a Japanese company who develops a really incredible offshore wind business abroad isn't necessarily going to be able to translate that one-to-one to Japan, right? Or that develops a CCUS based, or carbon capture and storage business based on injecting that into oil and gas wells, right, is not going to be able to translate that back into to Japan.
Yes.
So there are opportunities, certainly, but the fact that such in the U.S. the business models really depend on subsidies, and that the technologies are geographically really sort of linked, makes it challenging to translate that back, I think, or not as easy as it might seem at first.
Well, that is about all we'll have time for. So thanks to Anthony and Ian for the presentation. The slides, as well as the recording of the webinar, will be sent out to all the attendees on email. So look out for that. And as I said, if there are any other questions you have, please do feel free to follow up with us at the email you see on the screen here. After you leave the webinar, you will be prompted to complete a survey about the presentation today. We really appreciate it if you could take just a minute or two to do that. We look at that very closely and really use it to help inform and improve our future webinars. Speaking of future webinars, you see a couple of really interesting ones on the screen here coming up. So look out for those as well. But for now, thank you very much for joining us and have a great rest of your day.